live 8:31 a.m. Pacific Standard Time. The date 1/14/2012. Subject Amazon.com. 3-minute chart and longer term. We're going to be talking about one of the MMT's discoveries. This is our MMT platform right here. And MMT Joel has had the experience of really defining our platform and how accurate the directional movements are based on there are no standard technical analysis in there. And we're going to talk a history about the Keltner band, where it came from, how it was banned in. And so what I am going to do is use the Amazon chart as part of our discussion because we had a huge down move and then we had the huge up move. And so I'm going to ask MMT Joel, if you're ready, how would you apply this to your discoveries? What do you find the most reliable and the most accurate to your findings? And what are your findings of the Keltner band versus our market maker platform? And your on balance volume
Well,
and other things.
yeah. Well, I think the first thing we learn is these teeny lines, and this is proprietary to the MMT platform, is that you see prices attach themselves to teeny lines, and I think this is a perfect example. Is the Amazon chart, and is that these two peaks were at the same teeny line, and that teeny line is defined by the yesterday's intraday range, right? High and low, and the teeny lines, are like, up and above them or below them, and they have a monetary value to them. So when you start understanding the MMT platform being that high-low, and essentially the division of that high and low into teeny lines, and that the high and low divided by 2 is the half bar, right?
Well, yes, because there would be a buyer and a
And so
seller.
I
Right.
right and so I started looking for what kind of technical indicators will give me a indication of where we are in the volatility range. Because the other thing we learn is that if it's down 1 delta, 2 delta, 3 delta, and it's a strong stock, you're going to get a rebound off the top. Or if it's weak, you're going to get a sell-off. So, those are generalities. But so that forced me to look at technical indicators, and I think Mario and Brian and Rick have always pointed out they're lagging, and so I started looking for indications of volatility, and what are the things in technical indicators that will help me understand, looking at a chart, where we are in volatility. And there are a couple of them that people have used over the years, and one is average true range. Where's the stock moving over time, and then there's Bollinger Bands and Keltner Bands. And why I got interested in Keltner Bands is that they're actually defined as volatility bands. Okay, and if you go look up Keltner Band and try to do some historical reading on them and find out what exactly they are, you go and you find out that they're developed in the commodities and by a guy named Keltner. And when he did his calculations on Keltner Bands, he took a moving average, and then what he did is subtracted the high and the low divided by 2 from that midpoint, your moving average. And so you can imagine that high-low of the day divided by 2 above it, and high and low subtracted below it. And so you get a range that the stock moves, okay? And you could do one range of, or you can do 2 ranges, or you can do 3 ranges. Okay, and so if you look at a chart, you'll see that, hey, look at the stock's moving in the range of your high and low divided by 2. And what was interesting to me is Brian, when he started working on the on balance volume stuff, actually did, you can do on balance volume by high low plus close divided by 3, or you can do it high low divided by 2. Well, it
Well,
turns out,
would it make sense that there's only a buyer and a seller, so there's only really
yeah,
two
yeah,
people?
yeah, yeah, yeah,
Okay.
and so what you do is when you add the close, then you don't get your volatility in there, and you can't really see where you are, because they'll move the close anywhere they want to, but the high and low is the true range that you have things, and we want to buy at the low or sell at the high. You put the close in there and you can't see it.
No.
It masks it. And so Brian, when I realized that, well, then I went back and realized that they had done the same thing with the Keltner band. They had moved from high low divided by 2, and then in 1980 they changed over to high and low plus close divided by 3. So you don't really get to see the volatility of your stock, and that's what we're interested in. Where is it relative to the high? Are we above the average of where the high is, or are we below the average where the low is? And we always want to buy at the low and sell at the high,
Sell back to the public,
to
right.
sell back to the public. So that forced me to go in and start really kind of paying attention to Keltner bands. And because it's the definition of volatility, and what I want to be able to do, and I'm not quite there yet in my understanding, is, but you can, if you start putting Keltner bands on your charts, you'll see that what they do is they'll fall below. Usually they set up Keltner bands as a 20-day moving average of the high and low above the stock, or in a 10-day moving average, and then a deviation of two high and lows, minus or plus. Well, you can screen for stocks that are at above the Keltner band or below the Keltner band, which means they're out of their volatility range, or you can actually go up to 3 times the high and low and see, well, is there a stock that gets up to 3 times its normal range of volatility?
All right.
Yeah, and when you see stuff like that, you're going to be in a situation that this thing could turn around or it could flip, depending on your understanding of, is it above or below a moving average. Now, all I would say is that how do you get how you get to these Keltner bands is they're not on the MMT platform yet. I'd like to see them get there. Maybe it'll help people or not, but you can certainly put them in the AOS platform, and you can see where you are on your Keltner range. And really, the issue that I'm struggling with is that we know in the brain, right?
That's the application that's here
The
on the monitor.
application,
A market maker application.
the market application, mathematically where 1 delta down is, 2 delta down, 3 delta down, and on the other side, where that is. And if you have a moving average of delta that was over your price on the MMT platform, that essentially would be a Keltner band.
Negative delta, positive delta.
That would be a Keltner band, and you could see once you're below, the moving average of the delta range, you would be able to see, hey, I'm 2 delta down, 3 delta down. Well, that's what I look for now. And so, by example, if I look at the daily chart of Amazon on September 14th, 15th, and 16th, it actually got up to its peak, and it actually was at three Keltner band above the moving average.
Let me ask you this. I'm gonna populate the daily chart here, and what date did you say up here was the 14th? There's 1014. Is that what you're
Well,
talking?
the best I can do. Yeah, I'm talking about 1014 or 1015.
That's right here. You were
Yeah,
putting in
that
that
hit
triple
a.
top.
Yeah, and that right there is actually right on a Keltner band that's 3 times the moving what the high-low range would be.
We were
And
shorting that
so
stock
it
at the
hit that,
time.
and I think I know, but what I would say is that, that would have been in the MNT platform
Yeah.
probably some sort of high delta point during the interday, or the weekly range, a daily
The daily range.
delta. It would have been a high point. It
Yep.
would have been a high point, but
It would
you
have been
can't
way
see
up
that.
here.
And so what I wanted,
Go ahead.
yeah, you would, but you can't see that on the MMT platform relative to the delta. But the Keltner band is an approximation for me of where we are in the delta world.
Right.
And when I get up to these high Keltner bands, I go, look, it can't sustain high Keltner for a long time. And
Nope.
you can watch these things bounce off 2 or 3 Keltner, the 2 Keltner band or 3 Keltner band. And another way to look at it is an average true range. It's actually above its average true range by 2 times or 3 times. And so every point is to say, okay, am I above the Keltner band or below the Keltner band? And then to look at Brian's on balance volume thing and say, hey man, we're above the average delta movement of this stock, and we're way overbought based on the on balance volume indicators. Hey, it's a low risk short, or it's a low
it's
risk
very what you've
long.
done is you've let an extreme movement make its clear movement to the top at its resistance level. In the MMT platform, you could see up here that when the stock was at $246.71, we were short during this period of time, and we're harping on it every day. And then you could see where when you turned up here, you turned in your MMT daily platform, but look at all of the diamond areas that this thing is breaking. And what I would like to ask you, was a standard Keltner turning down as ours was showing here, that the top end of that delta, if I go up here to $246 or close to it, let's just say, when the higher that delta, 13 deltas up, that them 13 deltas up would reflect your Keltner band. And not only that, this is going to turn, and yes, it is a half delta movement here, but look at, they were 13 full deltas up, and today the stock is closing at 178, and the stock came down into the negative delta range. That's where I bet you my last dollar down here, minus 1 full delta to the penny, is where we turned up $5 over here on the intraday chart. We had, here's a 3-minute chart of Amazon, and this is going to reflect that low, and I bet you my last dollar that Keltner band was turning up, but that the price in the MMT platform had probably advanced a 5 teeny or 7 teeny breakout before that says that this was going to happen, and you miss out in the dollar price movement or not. Have you found that out?
I think that the point is that in August, right? So if we just say that between August 21st and then the September point, that's the delta range of that stock for that period. I mean, it went from it was all the way down to
August
a low
23rd,
in August,
right here,
and then it went up.
We bought it long.
And if you just look at but you got to. But if you plot it out, I mean, if you had your delta bands, you would see that it's 1 delta down, 2 delta down, 3 delta down, and you would know when right up here. This is 3 deltas up from the low,
Right
right? Or
here.
4 deltas up from the low on a
Right.
daily. And I don't know how to
Whoa.
do that.
These
You
are
do,
half
but
deltas.
that range.
Right. These are half delta lines, so
Yeah,
you know.
but you know when something gets 3 deltas up or 3 deltas down, hey, it's down there, right?
Right.
And I don't know exactly how to do that, but intuitively what I did is just say, well, the Keltner band represents the same thing. And so you can actually see that on the 19th of September, it was 3 Keltner bands above the moving average. Then on the 25th or 6th of November, it was 3. It hit a 3 Keltner band point and bounced off of it. And then in November, it hit a November 23rd. It hit a 3 Keltner down, bounced off of it. Then then in the December 13th, it hit a 3 Keltner band low on its load and bounced off of it. So this thing hits these 3 delta points. Let's call them.
Yeah.
It hits a 3. It can't make it above or below a 3 delta down or 3 Keltner band. No, it never. I can go back 5 years on Amazon, and every time the low hit that 5 delta point,
Right.
that 3 delta point, it always bounced off it. Now,
And our platform
the thing
here
is that
prices it all in.
I would never trust the Keltner band on its own. I would trust Brian's on balance volume matching up with the Keltner and say, hey, there's no denying it. Every time that it hits these low extremes on volatility over a 20-day moving average or a 30-day moving average, it doesn't go below that. And Brian would say the on-balance volume can't go to zero. These things can't go to zero. So when you get a matchup of your delta range with your on-balance volume, and that stock never in the history of its existence has hit this extreme low on balance volume, or it has never exceeded this volatility range that it didn't bounce. And that's what I'm trying to do. I would say that if you could plot the delta, the moving average of your daily delta on the MMT platform, it would be better than the Keltner band.
It is. The platform is much better than the Keltner band, only because I can tell you everything that you said is correctly. On this daily wicks, you'll see half delta, and 2 half deltas equal a delta. You'll watch. Half delta, half delta, half delta to half delta. So if you take the full half delta ranges up here, watch. 1, 2, 3, 4, 5, 6 off of the bottom. That's 6 half deltas. That's 3 deltas off the bottom.
And what I would say to you, Mario, is that I would bet you $1,000 that if you had a moving average of delta, that those bands would line up right on delta lines.
I bet you're exactly right, and that is the phenomenal part.
Yeah, I bet you, and I can't do that because I don't know how to do it, but I see over and over and over where there's only one charting system that I can get hold of right now. It's called Incredible Charts, and it allows you to compare the high-low divided by 2 versus the high-low close divided by 3.
Right.
And you can see when you put those charts together, you can just see that the high-low divided by 2 is really the better way to guess, say I'm at the extreme of my volatilities. And I think Brian intuitively did the same thing by doing his on-balance volume using that same phenomena that you picked up on high-low 2.
Well, yeah, because there's only a buyer and a seller in the market, and that's where everyone tries to make something more out of what it is. After about 20-some years, buy side, sell side tape, heavily, as I found out, there are only 2 people involved in the market, and that's the buyer and the seller, and the third person is a market maker. And today it's high frequency volume machines as well.
But I'm trying to, I think
You're doing
Brian is
quite well. So let me ask Brian if he's available. What about the on balance volume side of things and the power of on balance volume, sir?
Well, it's a great question, and it's something I like to look at all the time because it's like Joel says, you know where they're at, you know where they're in and where they're out. And if we go and we take a look at Amazon on 12/29, you can see that your 50-day on balance volume was the most negative at negative 81 million.
It was negative 81 million shares. Now, Brian Plain, you as being an MMT here going on your 7th year of placement, you have found out that the biggest negative on balance volume is where I'm getting what? Net long.
That's exactly right. I mean, you look and you go from the 12th to the 29th, which is how many trading days? 13 trading days, and
Yes.
you went negative about 81.7 million. So you went from positive 635,000 to negative 81.1 million, and you can see the washout in the name.
What was the washout from what price down? It looks like it was from 191 on the high down to 166 at the lows where we were buying.
Mm-hmm.
Now, Joel, on the on-balance volume, the reason why you're so phenomenally amazed with it, and every MMT should be, as the Market Maker School says, is the market makers on the floor in high-frequency volume computing machines make turns on imbalances. That's what we call it. You could call it, I call it really, I'm going to name it the SMF indicator called imbalance on balance volume. No, on balance volume, but what is it? Imbalanced on balance volume is the key to success as a market maker, because when all of the public is out, look to get in. When all of the public is in on positive on balance volume and taking that 10-day total, taking that out to that 200-day total, and using the 30-day total, is that when you have a broader view, you will know that beyond a reasonable doubt that when the on-balance volume is at its highest negative peak, I am getting what, folks? What am I doing? I am getting net long, right?
When it's at the highest, you're getting short. When it's the most negative, you're getting long.
That's right. So when I've got, Joel, let me ask you this honestly. If you see where every turn in Amazon was at whatever ratio, whether it was a daily or whatever time frame was, that you probably had a big imbalance of volume on Friday's daily low right here. And we're going to look at it right here. Here's that.
Well,
and this is
well,
a daily chart.
But I can tell you, Brian and Mario, that if I look at on balance volume using the standard technical methods, which is the divided by 3, you cannot see it. It's only Brian. So, like I would say, on the 22nd of November, it hit. 21st, 22nd of November, it hit 3 Keltner Bands down, and started to move up. And then on the November 13th, 14th, 15th, the spike down that day hit a 3 Keltner Band down.
It did right here.
Yeah, and I don't know. See, I'm trying to match Brian's on-balance volume and just see.
Well, let's go back to that date on our thing, Brian. Well, here's 11/25 one that you popped, and you
and that was 3. That was 3 Keltner Bands down.
Yes, it was. So in Keltner Bands, there were 3 down. In our system, each one of these teeny lines for Tuesday are $1.87. Let me blow this up, Brian and Joel. There's your bottom right here on your platform. Look at that pop. And yes, it was 1, 2, 3, 4, 5 down. 5 half deltas down.
Yeah. But every time it hits that 5 delta down, it has no choice to bounce. And then it held on the 20, I think the 28th or 29th of December.
Right here is 11/29. That's your big down. Slide that bid bar.
That right, and that bottom was three Keltner bands down.
And I'm down 1, 2, right in here, 2 half deltas down, right to the lines, and then look at that diamond
Yeah,
low here. Wow. And it held half of that daily bar too. Where was the Keltner
yeah,
band then? And compared to our system, I'm bouncing here and making another high right in this area. On
yeah. Well,
I
uh,
peak to
yeah.
191, half bar,
Yeah,
194.
and that was right at the 10 period moving average for this thing because that is only probably half a Keltner band,
Right.
of a 2 delta Keltner band. I can't help you there, but what I'm trying to say to everybody is that if we plotted the daily moving average of the delta
Right.
change on the MMT platform, and when we see these things hit two whatever they are, for the stock, you can historically go back and say, hey guys, it's 3 delta down.
You got to
It's
buy.
never ever. Yeah,
Yeah.
you got to buy,
You got to buy and you'll make
you
a lot
put
of
your
money.
bids out there, baby. Yeah,
Yeah.
yeah, you put your bids out there. But because we only have the daily chart and we don't have these relative moving points, I've just kind of gone to Keltner bands. And what's funny is Brian nailed it. If you didn't, I've challenged him to do this, to go back and divide by 3 and do the high-low close, and your whole system doesn't work.
No.
It wouldn't work,
No.
right?
No, it
I
wouldn't
don't
work.
think it would work.
No. Because standard technical analysis, which is
But
all the stuff here that people have used, look at Keltner was banned in the 30s, wasn't it?
well, no, what was it wasn't banned. What happened is that they switched from the high-low close. Somebody came along, right, thinking they're smart, okay, and did the following. They did exactly what we're talking about.
That's right.
Keltner, and excuse me for the misstate, it's actually in the early 60s. He was a commodities trader, not the 30s. But you can go back and find high-low close as the standard of everything in the commodities world was high-low close for in the 30s. Okay, but Keltner original did high-low close divided by 2, and then they came along and did high-low close divided by 3 in the 80s. All right,
That's right,
and the
because
Keltner band really it didn't really serve the thing that what we work on. I'm trying to find stuff that says I can match up with our platform that gives me an idea where I am in terms of delta.
well, you
That's
can.
all I'm trying to do.
You see this variable moving average right here in
Because
your. See my pointer? Variable moving average.
no, I don't.
Well, look here.
I don't. I gotta switch pages on my
Okay.
computer. Center.
Yeah, I'm right here on
Where are
monitor
you
number 2.
My
Right up here,
yeah, my
variable
computer's
moving average. If you put the variable moving averages relative to teeny lines, oh, I'm sorry, I just got kicked off of there. If you put your moving, if you want to compare the platform against this, variable moving averages is what a lot of hedge fund managers and institutional intraday managers trade with, but you can compare it to your teeny lines, and you can compare it to where that turn happened, but I went down another half a teeny, which is $1.87 below the line, and then I move up that $1.87 plus. I've already got about a $2 lower entry down here. You'll see that the variable moving averages will follow your MMT platform teeny lines that are priced right to each line perfectly, and you can see the lagging effect of them. I would use this one here. That's one.
Well, what I'd say to you, Mario, is the problem that everybody has is on that date, you did not know whether Amazon was going to keep falling or it was going to bounce, right? And what Brian would say is based on balance volume on this low date, the probability is that it was a low risk entry and it was going to bounce. And what the Keltner Band would say is in the history of Amazon, it has never dropped below 3 delta and not bounced.
Right.
And so when you see these extremes, it's are you going to pull the trigger or not?
That's exactly right. Well, you're taking all the risk out of the entry at that point.
But your brain doesn't want to believe that.
No.
Because it keeps on saying, it's going to fall, it's going to fall, it's going to fall. And everybody else is saying, it's going to fall. It washes them all out. And it's only those people that recognize the probability of the bounce is going to happen. It's so high that they pull the trigger. And that's what we're trying to learn.
Well, not what you're trying to learn. You're learning it.
Yeah. Well, I mean, but I think Brian would say, well, look at, man, your on-balance volume is washed out at that low point.
Yes, he will.
You're not going to see much chance of it washing out much lower. I would confirm it by saying, look at, guys, in the history of the Amazon chart, every time it hits 3 delta down in terms of a Keltner band, and that's the wrong term to use, right. I think we would probably say in a historical chart, the delta, with maybe 4 or 5 or 6 deltas, it would never has not bounced when it's gotten there. And that's when you say, well, I'm going to take the risk and pull the trigger. And that's what Brian's developing as a tool, and I'm trying to get onto a chart where I can see, hey guys, we're 3 delta down, and I can actually run scans for the group and show you every stock that is 3 Keltner bands down, 4 Keltner bands down. I can, and it could be 50
and your brain, your platform, market maker platform will verify it, will it not?
Yeah, I think you would have to verify it because I can't really tell like you can whether if you go and look at the Amazon chart or any chart and you just plotted the moving average of delta, delta.
Well, that's what we do.
I think you do it in your brain.
Right.
I mean, you know how to do that. But right. I say to the rest of the MMT people, okay, what are we going to do to kind of let us know what the thing is? And Brian's developed the tool for us, and I'm trying to come up with, if we could get Qua or somebody to address, what would be the moving average of the high.
Well, we can do that. We already know what to plug in it, and we're going to do it.
Yeah, and you could see that on the MMT chart, on a daily chart.
Sure.
And you guys always go back and look at your dailies and say, well, we're above half bar, below half bar.
That's right.
Or the hourly or the 30-minute. But when you have the Keltner band moving in real time on the AOS, and you see, for instance, on an intraday, you say, well, it just fell 2 bars below the Keltner band, then you kind of start asking yourself, well, is this a turn point? But if you had that on the MMT chart and you saw that where your teeny line was relative to the moving delta line, you would get a pretty good idea whether it's going to bounce.
Yes, it does, and it always gives it at the most negative ratios. It's going to bounce and pop up. I can say that Amazon's putting it on the bottom here, and I could say that on Tuesday that Amazon has this one bottom back over here that was put in on 12/29, as you said. That was a great bottom at 166, and that was the time to be long. And this is how these extreme lower levels are viable to sell for a profit and then short back down to their support levels. And yes, our system has all of these things plotted into it. It's because it's done mathematically, and Amazon's going to have support at 170.76. That's half of this bar that went up to 184. That's going to be your support level now, and that's the lower level. And you can see in here with even the gaps that were these wicks are bouncing, because what you see here is where you hit this teeny line right here, bam, right to the
Yeah.
penny. And I said, bam, right off of that bottom, right back up to where the body of the lower price is, right dead to that teeny line. Our MMT platform, right to the penny, and that was it. And it wasn't going no higher. And just by the way, these are going to be the same teeny lines it trades in on Tuesday. So you
Yeah.
know.
Well, what I would say right now, if you put a
And
bid
these are
out
half
once,
delta, $1.87 per line.
yeah,
$1 and
if you,
here,
yeah,
1.87
yeah,
calculated.
if you put a bid out at 164.13, you would be at the three Keltner
All right.
down band. And
So
I don't know if Brian put in the price 164.13
we'll have them
where
plug it
he
in
would
right
be,
now.
and then where would that be in the on balance volume, thing,
Okay.
right? So if you got, like for instance on 12:15, I think you had a massive wick down, right?
Well, let me go over there on 12:15.
Yeah, 12:13, you had this massive.
Here's 12:13. I was a buyer there,
That
buddy.
yeah,
One, two,
see that wick.
right to the penny.
Yeah, but what I would say
Bam.
to you, that is actually, that price was three Keltner bands down.
Isn't that amazing
Okay,
how I
and
have it
so
priced in?
right
The
now,
platform. So you verify the platform's accuracy, don't you?
well, yeah, but what I'm saying is that this all along that lower three Keltner band, if you just said, okay, 164.13 is a high probability of putting a bid out, and that the Keltner band changes every day.
Yep.
But that there's enough volatility in Amazon that that it can go down there and hit you. If you get hit, you're like guaranteed money.
You're guaranteed money. You're right. When it
you
goes
know,
down there and hits you, and let me go ahead and conclude this live video, and we'll come back to it. And yes, on balance volume, the magical thing is that all of those indicators were once written, but this platform is already plotted at any point. And then the engagement between the buyer and the seller and which way it's going to go from there. And we can see where, like you said, we're buying the lows and selling the highs. And we're selling the highs and buying back the lows. And we're buying the lows and selling into the highs. And selling the highs and buying back in those lows within it. And this is a daily level. On the 3-minute level that I have of Amazon, which I'm going to put back up here, is that in a shorter time frame, is that you can see where the turns start. And
yeah,
you can see where these lines do not lie in this platform on this intraday level. And every day, and it went down mathematically straight to the bottom, and it went right mathematically right back to the top. The major turns with the least amount of risk reward ratio is that the bear stayed too long. When that short cover interest started to cover, you started to see these big expansions, and all of your other things that you've discussed in here were turning and verifying it at these
yeah.
bottoms.
So I just put up the Google chart, and on the, when you were saying, it's extremely overbought, it's going to turn around,
It did right
It
here.
turns out that on the like that day in the first of the year, that was exactly 3 Keltner bands up.
Mm-hmm.
And then the low of October was 3 Keltner bands down. Okay, and the peak in October was 3 Keltner bands up.
Mm-hmm. And
So
that's on a
every time,
daily?
yeah, on a daily, on every time well, like the one in December, the turnaround in November was actually 2 Keltner bands down. But it tends that in August we hit 3 Keltner bands down. In October, we had 3 Keltner bands down. In the peak in October was 3 Keltner bands up. And so you can kind of say to yourself, it would say right now, put a bid out, on Google at 590.2.
All right.
That's 3 Keltner bands down.
And you
if
would have
you
got hit and
there,
ripped.
You got hit and ripped. Now, I don't know if it's going to get there, but, as these things unfold, you can look at your Keltner band and say, well, I can just approximate. But I don't think we want to do that. I think you actually want to get somebody to be able to plot the moving average of 1 delta, the moving average of 2 delta, 3 delta, 4 delta, and then you can choose like your stock and say do a daily on it, and you can project those moving delta lines out and just say, hey, I'm just going to line the bid all the way out at this price, and if it gets volatile and I get hit, I'm going up.
Right. And do you find it amazing how I had called the bottom on it? And then say that we would go to 670, and we went right to 670 and reversed and came all the way down here to 616. Now, let me tell you.
I do, but what I would say what's more amazing is you always go, hey, I'm just talking. I want you to go look at the brain.
Right.
And that the brain well enough, but, it's almost like
shorted it right here with you.
Yeah,
all the way down. Look at that.
I think what the deal is that, as you say, you are gaining confidence in Brian's math, right? And that you're confident enough.
Well, what I'm confident in is that everything that he's been taught, that he's putting it into applicable use, and he can see, and he's done extremely well. That's the good thing about MMTs that go through this long journey of life involvement with markets. When they are taught in the best way and they put it to applicable use, that is what I trust. Does that clarify it? As far as my trust level and trusting the numbers.
But you're going to let them short based on information on balance volume.
That's exactly right.
That's exactly right.
I don't need to look at nothing else.
Yeah, and you're getting trust in that. Now, for the MNTs, what I would say is if you go
I will do it every time.
If you can't do this on AOS, I'm sorry to tell you, but
they
don't allow you to mess with the Keltner bands the way you need to. But if you go set on a typical charting platform, the Keltner would be 20, 3.0, 10.
Okay.
And then do 20, 2.0, 10.
Okay.
And that would be the upper moving, the 20 represents the moving average of the high-low, probably close divided by 3, because you can't get, except for on incredible charts, and you can get a trial on it for free for like 30 days.
Well, we'll do that.
Go in there and set.
We'll do that.
So I'll put the link in for people, and because you can actually mess with the original Keltner and then the modified Keltner, which would be the divide by 3, and you can set them at 20, 3.0, 10, and you can see on these charts that math probability says you get above that 3.0 delta range. And I would prefer not to use anything but the MMT platform, but I think we're going to have to decide the value of
when your Keltner band is going to change. When your Keltner band is going to change, you're going to be at 100% IR. You're going to be at the ratio peak of the day, no matter what, at the higher valuations, and that's going to be these things in here. That's going to be this bid and ask ratio is going to confirm it. It will peak and it will turn before it does. Then your secondary indicator.
What you don't know, Mario, is where are you relative to the moving delta band?
Well, that's
if you have a moving delta band that would be a 20-day or 10-day a delta band or whatever you want. I don't know what you would want to do,
You got to
but I
go
would argue
5
that
period, a 10-day
if you knew
period.
that your intraday range was at a 3.0 delta
Right.
band, you would say,
Buy the
hey,
farm.
look, it's too high. I'm shorting.
Right.
On your intraday range, because where are you in your intraday range relative to your delta,
Right.
right? And because the intraday range early on could be 100% and you never move more than 2 points. But if you're 3 delta up and that's your 100%, then you would say, hey, it ain't going to last.
Right. So I'm going to conclude
Yeah,
this.
and actually, I think you would say, "Hey, I'll allow you to do an overnight on Google."
I would.
Short, and so I would argue that if you could get the plot of Brian's on balance volume matched up with your with your delta, you would see that when those delta and on balance volume converge, you ain't got no choice.
That's right.
Brian, am I talking bull, or are you hearing?
No, you're absolutely right. When they converge and they show up at the same time, you're going to see that the stock's just going to stop going down after all that volume's washed out.
Yeah, and that it can't wash out in a volatility anymore.
No.
So I just think that we're trying to develop the tools. Let me put the link in. I'm going to put the link for the Incredible Chart free trial in Skype here, and you guys can start messing with these volatility type of things and see how a lot of you have a lot more experience with. Let me put it this way: the platform, the MMT platform, and delta expansion and contraction, and it'll take me a few minutes to do that, but I'll tell you when I get it done.
Okay. I will conclude this one here for now. And once again, this is an MMT live workshop happening here on 1/14/2012, comparing standard technical analysis with the Market Maker platform. But the Market Maker platform is so accurate, and it verifies all of these other things before the fact, not after the fact. The entry and the exits and the stop managements and the things that we do here, this is how we spend our time together on these topic subjects. And we cover many things, and we'll visit this throughout the morning.